Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Good afternoon. This is Katrina Madewell with Charles Ruttenberg Realty, and you're listening to Real Estate Radio Network, Tampa Home Talk. Thank you so much for joining us this afternoon. Really excited to have our guest join us today via phone. Andrew Feinberg, which goes by Andy, has some very, very strong credentials. He's the fund manager for CGA Capital Management, LLC, and he also does some great things over there at Kiplinger. Been a columnist for 12 years. Do I have that right, Andy?
Yes, you do.
Thank you. And we also have some other sit-ins today for our show, our very own Jodine Carr. She's joining us today in studio.
Thank you for having me, Katrina.
Thanks for joining us. I know you don't get to make it in the studio that often.
No, not often.
And Ricardo is going to be joining us as well from Sabadell Bank.
Hey, Katrina, how are you?
Great. Thanks for having me, or thanks for joining me today.
Thanks for having me here. So.
You got it. So, Andy, I know we had you on last week, but we ran out of time very quickly. As you know, it's easy to do. But you had some fantastic points and some things that we really wanted to share and, you know, jump into some of the most commonly asked questions that you get. So whether you're a first-time investor or you're someone that has a lot of money and you're trying to figure out where to put it, that's kind of Andrew's niche. That's what you do, Andy, right? You pretty much,
right.
The people and the funds that you manage start at what, $500,000? Did you tell me?
Oh, no, it's $50,000.
Oh, $50,000. Okay.
Yeah.
So you still, you do some reasonably priced stuff. So talk about last week, first of all, because I know that we ran out of time. Was there anything that you wanted to share that you didn't get a chance to finish last week, or were we able to pretty much get it all in there?
Well, we were able to get it in. I just wanted to say a little more. We started to talk about mistakes that mutual fund investors make, and this is true of all investors, whether it's stocks or funds, or sort of getting the timing wrong, that they'll see that a fund has done really, really well. They'll look at the top performers, and then they'll invest, and then it'll go down because the market is cyclical. Some things are in favor for a while, then another group takes over, and if you buy the hot group late and then sell it when it starts to disappoint, that's a sure way not to do well. And, I want to tie that in with the question of is it too late to get into the market? Someone who has been either sitting on the sidelines or has only put some of their money into stocks or funds. And I think it's not too late, and I mean that in two ways. Not that it's a prediction that the market goes straight up from here, because it's not that at all. But don't get worried by the people on TV who talk about, we're due for a 10% correction, because they happen all the time. We haven't had one since 2011, but we will, and it's not a big deal.
I would imagine, Andy, that it's kind of the same across the board with a lot of things. I mean, as it is with real estate and any investment, it's going to take hits, it's going to go up, it's going to make changes. But I think for me, and you're obviously way more seasoned in this than I am, but it sounds to me like a lot of the common mistakes are not sticking it out for the long haul.
Absolutely. I mean, you have to start with both a plan and a sense, a commitment that you're going to stick to the plan even when things get bad, because at some point they're going to get bad.
So when do you see people freak out? I mean, I know that they're looking at their portfolio and, they see when it goes up, they're all happy. They're not going to change anything. But when they see these huge dips, I imagine the more aged someone is, the more they might be concerned with that.
Well, we just had an amazing decade, amazingly horrible, that we had a crash in 2000, led by the technology stocks. And then we had a crash in 2008, led by financial real estate, and the whole market went down 58%. So a lot of people I know and read about, it was like the second one was one crash too many, and they took their money out near the low, late 2008, early 2009, and instead of thinking, one, in the modern era, we've never had two crashes in so short of.
Andy, let me ask you a question about that. I'm curious. You say a lot of people pulled their money out when the market dropped, but where did they put it?
Well, interest rates were a little higher then, but they weren't. They put it in CDs. They put it in savings. They just couldn't bear to lose any more, which I sympathize with. This is such a common human feeling, and I've had it myself, over the years. But you have to learn as an investor to cope with that. And March 2009 was a great buying opportunity if you could just tune out, the misery of the preceding 9 years. That would.
It's interesting. I'm sure Warren Buffett's famous saying, the whole idea and the thought behind that is, like with anything, you want to buy when everyone else is selling and sell when everyone else is buying.
That's right. And the it's one of the few things that is absolutely true about the market all the time, especially the buying when people are selling, that you get some ridiculous prices. And so then I read this, I was reading a few months ago in the Wall Street Journal, other places, people who had sat out the whole bull market, since March 2009, were now, tiptoeing back or putting money back in. And I felt so sad reading about it. Not that they're making a mistake now, but they made such a devastating mistake 5 years ago. And part of my mission is to try to get clients, friends, and people I talk to on the radio to be prepared for the ups and downs, and to weather it. It does always. The market always comes back.
It will. It's I would like to relate that.
Stocks don't always come back. We can talk about that later.
Right. I'd like to relate it to homeownership because I've done this my whole life. So like you, I know it very, very well. And the reality is, experience shows that in the long haul, real estate is a very good investment. And people are always going to buy houses because they need a place to live. They're always going to buy land because it's a good investment, and they're not making any more. So even though it took a huge dip, a lot of people saw that, myself included, it does come back. It may take it some time, but it definitely comes back.
Right.
So speaking of which, I know, our experience from one of the things that you had on your list, because we always ask our guests, what are some of the top, 5 to 10 questions that you guys get every day that we could answer on the show. And I know you were talking about hedge funds and them, being a bad idea for investors. And from what we've seen as far as hedge funds and how this would relate to a lot of the general person listening and some, people that are my clients that I know listen to the show, their experience with hedge funds, if they don't invest a lot or maybe they're new, essentially they know that hedge funds are these companies that are coming in and they're buying properties that has kind of dried up the market. So the inventory the buyers have to pick from is kind of low. And it's on the flip side of that, it's put a lot of sellers in a position where they can actually sell their home now and the market's not so depressed. So I think they've kind of come in and cleaned up a lot of the mess a lot sooner than it would have taken to recover on its own.
Well, that's one of the things good hedge funds are supposed to, is buy low and then, sell high. I think hedge funds have, obviously I'm biased. I run a hedge fund. But I think there are several misconceptions people have about them. One is that they're all for the mega rich. And
can we break down a hedge fund, Andy, real quick? So if you were explaining that in its most simplistic form, like what would you explain a hedge fund to be?
It is, think of a mutual fund first. It is structured like a mutual fund that, a group of investors pool their money and put it in a fund. Hedge funds can do more things than most mutual funds, although these days some mutual funds do operate like hedge funds. So they will sell short, bet that some stocks will go down or some sector of the market will go down. And one of the reasons, and some of them will bet on interest rates and currencies. I don't do that. I just do stocks. I don't do bonds at all.
Gotcha.
I do some short selling, but I'm mostly a long investor. But and I think that's one thing that scares people, that hedge funds can use a ton of leverage, of borrowed money. And I would tell any investor to, especially a new investor, to just avoid hedge funds that use a lot of leverage, because if they get it wrong, things can go very wrong. And not that it happens too often, but when it happens, people are very aware of the hedge funds that have blown up. And I think that's where part of the misconception that they're all gunslingers and
right.
They're shooting for great returns. In fact, the last 5 years of the bull market, hedge funds have been bad performers precisely because they've been hedged. Their average exposure to stocks has been like 35% or something like that. So their returns have trailed the market horribly.
So how
5 years.
How would an investor basically be able to tell the difference between a good hedge fund and or a bad hedge fund, or I should say, I guess, the people managing it really?
Well, two things. One, you look at the record. Two, I would talk to the manager, and in my case, I think you've got my phone number up someplace.
We do. We're going to post it actually on our show page, which is, if you just go to TampaHomeTalk.com. Also, we're on Facebook and Twitter at Tampa Home Talk. We're going to post Andy Feinberg's information so you can reach out to him directly.
The other things you should look at are the fees. Hedge funds are known for having outrageous fees, and mine are much lower than average, but fees alone shouldn't disqualify someone if they have a great record. But the two things to avoid a fraud, one, find out where the stocks are held. Madoff succeeded as a fraud because he had custody of all the assets. And in my case, there were Goldman Sachs, and in almost every hedge fund, would have been Morgan Stanley.
So when you say where they're held, you want to know like the escrow account where the money's sitting.
Yeah, and it's I couldn't steal money from a client if I wanted to, because I can't withdraw money from their account. I can do it and send a check to them, but I can't send a check to me.
Gotcha.
And the other thing is to ask a question or two about the accounting firm. Madoff used this guy who had, he was the only client. It was sort of, who needs an accountant when everything's fraudulent anyway?
Right.
But it doesn't have to be one of the big four. But you should find out, how many clients do you have? How many? I would talk to the accountant. I would also talk to the administrator who just sends out the monthly statements, and very brief conversations, but just to find out that these are real people, and to find out that first and foremost you're not going to get defrauded, and whether the fund performs well is very important, but first make sure you're not operating with a crook. And then I would say, avoid a fund that has a lot of leverage.
Gotcha.
Just because, that increases the chance that something can go wrong.
Now, I know a lot of people ask about stocks, and when they start to rally and they keep going up, 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 and then people are always looking, wow, I should have bought that stock, right? Like Google. When you look at the price, for their initial public offering that they came on the market and where their stock price is now, it's crazy. Right. So at what point, is it too late to actually invest in a stock?
Well, it's interesting you mentioned Google because, they had, the stock was down $20 today, and they had, somewhat disappointing earnings after the close yesterday. But Google had been coming down. All the high-flying tech stocks, the Facebooks, LinkedIn, and Twitter. But Google is very different it's much, much cheaper, and it has, a ton of cash. And I would say, Google right now is a very interesting stock to buy because its disappointing quarter, and I listened to the conference call and looked at, was actually, quite good. It just wasn't exactly as good as people had hoped for. But since it's been coming down, and you can get it at 15 or 20% off where it was a month ago, I think that's interesting.
I remember I looked up what their IPO was. I forgot what it was, and then last time I looked them up, they were like $600 a share, and I think today they closed low fives.
I'm sorry?
I think they closed mid to low fives today or something.
And that's after a 2-for-1 split, right? Because it had gone up over 1,200 at some point. But, Google, as opposed to some, I'm going to talk about Tesla maybe in a moment. Google is truly a fabulous company, and it will have, I was going to say decades. It will certainly have another decade of really good growth ahead of it.
The interesting thing about, and I'm speaking really just from a lay term, Andy, but it's interesting because when you break this stuff down and you think about it in the most simplistic form, I know for me, I kind of look at it to see, and there was a commercial I saw a long time ago where the girl was like, Dad, I need $50 to go to the mall to buy these jeans. And she was just all about, Dad, I just need $50 or $60 to go to the mall and buy these jeans. They're the latest thing. And the dad's looking it up and he's like, all right, I'll give you the $50 to go buy the jeans. Just tell me, who makes them. Give me some more information. So then he's Googling to see if it's a stock he can purchase. Right. And I think it's interesting if you just kind of follow, like, in general, like, what are trends that people do? Like, what are trends where things are going? Like, a long time ago, I was in an investment group with a bunch of girls, and we pulled our money and bought different stocks. And one of the stocks that was interesting, it was way ahead of its time that we purchased, was Sirius Satellite Radio. Mm-hmm. And if we had stuck around and stayed in our investment group, we would have done quite well. It's my opinion of it. I think we would have done very well. But, hindsight, people move on. You really have to, I guess, get in bed with the right people if you're going to invest. Right. It's probably no different than your money manager.
And, in technology, especially, you have to, if you go back to the year 2000 and think of the leading search engine, there was Yahoo and Alta Vista and Microsoft Explorer, all of them, Netscape, and all of them got destroyed by a company that didn't even exist at the time. Google.
Well, it's funny because you have techies like me that, I remember when Google first came out and I started using it. It was such a good search engine. And at the time, a lot of people weren't even really on the web. They didn't really know what a search engine was, let alone how to use it. I would say PCs coming into the average home, like it was, around the Windows era, where more people starting to get one PC in the home. Where before, I think Mac was ahead of the curve, and they brought PCs into, the more elite, the homes that could afford it, I guess.
Right. But it's so when you're buying a technology stock, and Warren Buffett, you mentioned before, he avoids them basically,
right?
Because there is,
well, they could be hit or miss.
Railroad, you can't be sure it's going to have its advantage in 10 years.
Nothing sure, but I think with technology, I don't know if that'd be something to sit in for the long haul, but you could definitely, I think, catch something early. This is my opinion. I'm obviously not a seasoned investor or manager like you, but my opinion is if you catch something, I think, early enough to where it's ahead of its heyday, you could make some money on it and then sell it and, try to get in on something else.
Right. Well, on that point, some of my clients say, why don't we own Tesla? And there are several reasons. One, I'm a value manager.
Andy, I can't wait to talk about Tesla with you because I want to talk about Tesla a little bit more and, a little bit more about that company and who they are and why it's such a cool car. We have to take a very, very quick break. We'll get back in just a minute. We're going to rejoin with Andy Feinberg, and we're going to continue on with Tesla and why they don't own it. You're listening to Tampa Home Talk. It's Katrina Madewell. We'll be back in just a minute.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHomeTalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing cost. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHomeTalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
Welcome back to Tampa Home Talk. This is your host, Katrina Madewell with Charles Ruttenberg Realty, and you're listening to Tampa Home Talk on Real Estate Radio Network. We have our special guest joining us today, Andrew Feinberg. He goes by Andy. He manages you're the manager of CGA Capital Management, which is a hedge fund?
Yes.
Okay. And then we also have our very own Jodine Carr in studio with us today.
Hello, guys.
So Tesla. Let's talk about Tesla first of all. It's more than just a car, right?
Right. It is. People. Let me back up 1 second, and this is a cautionary. People, not just investors, love stories. There have been all sorts of studies that when you have a jury, either a real jury or a pretend jury, the lawyer who uses a narrative to make his case does so much better than someone who has a disjointed, this witness here, this witness there. People love stories, and they love stories about stocks. And Tesla seems, like some other things, to have this open-ended growth possibility, that it can change the world. And, maybe it will. It's certainly part of an auto movement that I think will change the world.
I think so too.
Yeah, but exactly what its role in, already its value is coming close to that of General Motors. And, GM is spending another $250 million to, improve its Volt.
Right.
Who
do you think their audience is? I mean, obviously Tesla, their buyer, their consumer are people that, are in the sports car market. But I know that I've heard that they're
go downscale.
Right. That their plan is to bring something in that's more of the mid price range. And their cars are amazing because they don't use gas. You don't have to get an oil change. I mean, they have a tour of the Tesla store here where you can actually test drive them and get a bunch of information on them. It's a very, very neat organization.
And from what I hear, everyone who does a test drive, whether they buy the car or not, they buy the stock because it's a good car, and which helps. It's quite a product, and it says something about you, that you're on the cutting edge, you're doing something good for the planet, et cetera, et cetera. Plus, it drives well, and you're not the kind of person who uses it for 1,000-mile trips all the time because it's less effective for that. But Tesla, when it was 40, might have been an interesting speculation. Now that it hit 200 and it has come back some, it is so highly priced, you can't know if it's a good investment.
At what point did their stock shoot up? Do you know? What was the driving factor? At what point did their stock shoot up? You said it was $40 at some point.
Last year, I think it was up 4 or 5-fold last year alone, or from I can check it, but it's in the last 12 months, it's been a monster performer as more and more people tried the cars and loved them, and they sold out. And then they talked about making these $35,000 cars that would have more access to the middle market.
I don't think a lot of people even know, about their product line. And I think if they spend a bit more money, like once they launch this product they're talking about, they spend a bit more money advertising it and marketing it to the general public, I think they're going to take a huge share. And it might be temporary, but it'd be interesting to have this conversation again, Andy, in another, 2, 3, 4 years and see what it's done.
Right. Well, the thing is, they may someday grow into their valuation, but it can't happen, for at least 5 to 10 years that they're actually selling at, like 20 times earnings or even 25 times earnings, because they just can't get the production up that high. It's going to take a long time.
Right.
And, they may...
So you think their demand...
As other fine companies come in, but it's... I remember, and I remember when Toyota said they're going to build a luxury car. And I said, yeah, right, Toyota's going to build a luxury car. And they made the Lexus. And the Lexus became this iconic luxury car and remains so today. And just this incredible home run in this new market. And which makes me think, what is Toyota and Honda and GM and Ford and BMW? What will their entries be in this market? And
do you think they're going to change to compete with the Tesla
change
products?
I think they'll, not everyone will. As people, there's an economic decision they all have to make, and but they're all, if indeed we agree that this is going to change the world, that this is the future or one potential future of how we drive. Toyota, GM, Ford, etc. would be crazy not to. And GM already has the Volt. It's not a hit like Tesla's car is, but we'll see how much they can improve it. And
it's interesting on their website. They're slated to looks like almost quadruple, where they have places to essentially drive and check out the car. It'll be interesting to see how. I can't wait to see how that evolves. It's something that I'm pretty passionate about as far as being green and conserving and that type of stuff. But I know I don't want to spend the whole show on Tesla either, as cool as it would be just to talk about Tesla. When you talk about people's portfolio, and I'm sure people have different tolerations, a lot of it may be depending on age and that kind of stuff, but do you think it's good to, how do you think someone should break up their portfolio, and how much for speculation? And
well, I think it is, if you had $50,000, and I'm just tossing out a number.
Yeah, let's say someone has $50,000. They come to you, they say, Andy, tell me where I can put this $50,000 to make it grow.
Well, I just invest, all that I invest in is stocks. And when I think the market, if I think we're going through a tough time, I will have more short positions and things. But I wasn't thinking of me so much. I was thinking if someone is managing it. And I'll get to that. My favorite, my biggest holding is residential and commercial real estate, which I want to talk about in a second. But let me just, on Tesla, and speculation, I think it's great if people have a small part, 5%, maybe even 10% of their portfolio that is where they can have some excitement. And that's where Tesla, should go. And that's where other stocks like it should go, so that it's not a huge position. And if somehow it got cut in half, it's not a disaster
Right.
portfolio. So, I would and I think that people can get bored and frustrated seeing stock. They may be on LinkedIn and they don't own LinkedIn, but they see how well it's done, or they may use Twitter and or they use Facebook and see how well that's done. And you can own these things, but I would own small amounts at these prices.
Right.
And put them in the speculative.
Do you think it's good to try to catch those stocks earlier at their IPO?
It's certainly been good, in the last 2 years, but this has been an extraordinary time. I mean, I
think the world as we live in it has changed, and when that happens, it's going to change a lot of the rules.
Right. I just want to remind people that in 2000, Google was 130, and now it's 36. 14 years later. The main reason for that. I'm sorry, Yahoo was.
I was going to say that doesn't sound right to me.
Sorry, Yahoo was 136, and now it's 36. And
when you look at that from a consumer perspective, though, Andy, Yahoo doesn't offer any of the value-added service that Google does.
No, and exactly, it's Google that took most of that value away, and I use Yahoo Finance and and I think they're a very bad company. I mean, they make things. Google makes things easy. Yahoo makes everything difficult. I don't know why, but they do, and like Amazon makes everything easy.
Right. Those are the companies that excel. People, we live in the now generation. People want things. They want them now. They don't want to have to wait. And, they want to dive in and do it now. If they can get it now and it's easy, they're usually going to buy it, utilize that service.
Right. But then to answer your question about where someone should put money, I would, you have to have, whether it's through funds or stocks or a money manager, some diversification. The largest segment real estate segment is 15% of my portfolio, and other financials are 15%. So
I can't wait to dive into the real estate segment with you, Andy. We're going to take our last quick break of the show. When we come right back, we're going to dive right into the real estate part of it, and I can't wait to hear what you have to say. This is Katrina Madewell, your host with Charles Ruttenberg Realty. You're listening to Tampa Home Talk. We'll be back in just a minute.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHomeTalk.com under Radio Show. What makes Silverton different? products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing cost. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHomeTalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Hi, this is Aaron Davis, owner of Hillsborough Title. Hillsborough Title is a local family-owned title agency here in Tampa Bay. Our service, strength, and knowledge make us different. We've served Tampa Bay area for over 30 years. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Call us at 813-712-8888 or visit us on the web at thebesttitle.com. That's thebesttitle.com.
Curious where your credit score is? Text the word credit to 813-377-2775. Not sure where it needs to be in order to buy? We'll tell you. Simply text the word credit to 813-377-2775 for access to your credit score now.
Welcome back. You're listening to Tampa Home Talk, and I'm your host, Katrina Madewell with Charles Ruttenberg Realty. We are on Real Estate Radio Network. Joining us today via phone, we have Andy Feinberg. Andy is with CGA Capital Management, LLC. He's also been an author and a expert contributor for Kiplingers for the last 12 years. And I know before we took a break, and it's been a fantastic, fantastic show. So if you missed any part of today's show, you'll definitely want to catch the whole thing on a podcast. Just search for Tampa Home Talk. You can also go to our website, Facebook or Twitter, where we'll post them there, tampahometalk.com. So, Andy, where we left off, we were talking about Tesla and a bunch of other fantastic things, which I'm sure people are getting in and out of their car. They're going to want to come back and listen to the whole thing. But you said that you, as a money manager and a hedge fund manager, like real estate.
Right. I mean, as a value manager, what I think, the housing cycle still has some years of growth ahead of it. Household formation has been so slow because so many people are living with their parents,
right,
who are in their late 20s or early 30s or whatever. But we're
seeing a lot of that multi-generational housing too, Andy. And the interesting thing, and I had this conversation today with a brand new client, talking about dad moving from another state, and she's specifically looking for properties with detached in-law suites. Mm-hmm. We have a pretty big demand for that. And so we see a lot of that, cohabitate or like multi-generational housing. It's a little niche section of the market.
Right. Well, even that, one, I think gradually people are going to move out, but I think that's probably a growing niche for several reasons. So my view of how to invest in real estate via the stock market is to, try to own companies that have a lot of land which is undervalued. They bought it cheap. And my biggest holding is called Howard Hughes. And Howard Hughes is a strange name for a company since he was a lunatic CEO, as all people know. But they have an amazing property in Honolulu where they're building condo towers, and Mark Zuckerberg bought several of them in the first building. They own the South Street Seaport in New York, and they're redoing that now, and they're going to build a 50-story tower there. They own a huge amount of land outside Las Vegas called Summerlin, and Las Vegas the property market is very strong. They also own master plan communities in Houston, and Houston has been one of the most powerful Houston didn't even have a downturn, basically.
It's boomed big time. I know a lot of people that have not only relocated there, but they just, like you said, they moved right on through any type of market drop.
Well, because, what are some of the one mega trend is that we're, just about self-sufficient in energy. And, the natural gas fracking boom has been great for Houston, where a lot of these companies are headquartered. And so, the stock's now about 140, and I think today it's worth $200, but it's going to grow because they have all this land they can either sell or develop with partnerships with other developers. And a similar company, much smaller, is called UPC, and that has land in California and Washington State. And they're a home builder, but they're also a landowner, and that's one reason the stock market likes simple story. Like, they want you to be a home builder. Don't tell me you have all this value in land. But the home builders have already run up so much. I don't own any of the pure home builders, the Lennars and whatever, because I think they may have gotten ahead of themselves.
They're just such a powerhouse. I tell you, they, when you look at the Kins report or the local real estate report here, they just dominate the market with regards to shares that they move. It seems like at any cost will move whatever they can. So it's just interesting to see if they have any type of shakeup or change in management that may substantially change what they're doing.
And two other things I want very quick, is Radian, which is mortgage insurance. As the housing market improves, mortgage defaults are at their lowest level in 5 years, and they're declining. And
I would not buy mortgage insurance stock personally. From what I see on the mortgage and the real estate side of it, and I started in the mortgage side many years ago. I mean, I try to educate my consumers, and you could probably even chime on this too, Ricardo, working for a bank, but I'm very anti-mortgage insurance. So if we can, if they don't have 20% to put down and we can find another way around it, doing a HELOC or something behind it, it's just a waste of money. It insures a lender against default. And I think...
I don't like the product.
The what?
It's just, I don't have to like the product to like the stock.
Right.
But
I mean, just for that reason, I think people are getting sharp to it. I mean, when you look at FHA mortgage insurance, for example, their insurance premiums have tripled. And as interest rates rise and homeownership affordability drops, I see the government trying to regulate that.
Okay. In fact, I will look into that. The one other I want to mention, and it has a bad first name, but it's Sears Hometown and Outlet Stores. And, even though Sears has been, losing customers for years, it still has over $30 billion in sales. And these stores are franchised, and they sell the Kenmore products and the Craftsman products, and
they're kind of like a scratch and dent, like an outlet, right?
Well, I'm sorry?
They're like a scratch and dent outlet type of thing where you can buy appliances that either didn't sell or scratch, that type of stuff.
Yeah, but these are also, smaller. So as some of the big Sears stores are closing, they're opening up a lot of these Sears Hometown stores, which have a much smaller footprint, but you can still buy, washer dryer there. You can buy a stove. You can buy, your Craftsman tools. And
are they publicly traded?
Yeah, it's SHOS is the symbol, and it's $21, and I think it's a steal. That is one, because the plan there is to use the extra cash to buy back stock. They've already done some of it. And Eddie Lampert, who's CEO of Sears, when he was an investor in AutoZone went up 500% without growing same-store sales. They opened new outlets and took all their cash and just bought back stock. And I love companies that buy back a lot of stock when the price is low. A lot of companies, unfortunately, buy back stock when the price is high, and that makes no sense.
I'm surprised you don't have anything to say about that, Jodine. She, when she joined us, she came from that world.
Yeah, I came from Advanced Auto Parts, so yeah, they...
Oh, okay.
Yeah.
Another good company.
Yes, very good company.
Well, there's an example of, the whole group did well.
Right.
O'Reilly and
it's interesting, going back to your Sears hometown outlet, you have to look at, I guess, the nuts and the bolts sometimes too. And I think when you look at it from a general perspective, if you can reduce your overhead cost and still have a great product under a name that's known, it would make sense that they would do well, especially at a lower price stock.
And in fact, they're inventory light, but you can order, you can go in, you can look at catalog, look at the internet, you can order anything that Sears sells in these stores and have it delivered, even if it's not on the floor. And so that is...
that's smart.
Yeah, it's
and
very
that's
smart.
That's what Sears didn't do. Wouldn't you say they didn't change their business model? They never changed anything. They were the same store forever, and they got surpassed by these other big box companies.
Right. I mean, it's certainly... and Sears is a wonderful, cautionary tale to invest. Something can be this, beloved brand, and then it can deteriorate for a variety of reasons. And that's,
Woolworths.
I'm a long-term right, Woolworths. I'm a long-term investor, but I always have my eye on the exit. Or I'm always asking, every day, every week, is this still worth owning? Has anything changed? And, some people just fall in love with their stocks, and that's Wall Street's a place where there's lots of unrequited love.
And sometimes I think that might be a bad thing, Andy, if nothing changes, because unfortunately the times change, and companies need to evolve with that.
Absolutely.
So we have to wrap up, because I know we're at the top of the hour. Thank you so much for joining me today, Andy Feinberg. I really enjoyed having you on the show.
It was a pleasure, Katrina.
Would love to have you back with maybe some stock picks and different things of the week. So thank you so much for being my guest today. This is Katrina Madewell, and you're listening to Tampa Home Talk on Real Estate Radio Network. We are done this week, but you can catch us every Thursday and Saturday at 5 p.m. But for today, we are out. 'Cause it's a long, long